Okay, markets are up yesterday. Everything else sort of sideways. Let's take a look at the charts. S&P closed at a high of day above this descending line, so indicating maybe a small continuation tomorrow. So let's see what happens there. Next trend line really for me is this resistance point here. Let's call it 407.5-ish. I don't think we'll get there. It's a bit too much to ask after this big move, and there are some banking stocks, ETFs that I think are leading the markets that are still not out of their descending line. So they have actually already hit their resistance point. We also have GDP numbers coming up Thursday, so maybe a small reversal before we hit this trend line, but very strong here, the S&P. Nasdaq, look at this, very close. Obviously, Nasdaq's been very strong lately, very close to its horizontal resistance. Let's call it 315.5-ish. We probably will tag that today because it's not that far away and because we closed a high of day, so it suggests the markets were ready to continue. We just closed before they could carry on, so we'll probably restart tomorrow. So Dow Jones, very similar chart to the S&P. They really look very similar now. Again, closed also above its descending line. We have this horizontal line here, which I think is next resistance. Will it get there? I think it's asking a bit too much, but if it does, it'll be resistance. I think we'll reverse before we get there. Russell 2000 finally starting to have its first bullish candle in a while. I mean, this one here was bullish, but the whole markets were reversing strong at that point. So I think it could continue maybe. I don't know if its resistance is 177.5 or 178-ish. Maybe I'll just put an average between the two, but could tag that, but it's asking quite a bit like the Dow. So I don't know, 1.5%. It's not much for the Russell, but after already making this move, might be a bit too much. I'm still, by the way, extremely bearish, medium term, long term, even short term. And just ultra short term, you could have a sort of a little bit move higher intraday. Again, we have these GDP numbers. Maybe that's the catalyst to reverse this whole bullish momentum. Just quickly look at the XLF though, because for me, the banking ETFs are actually leading the markets, which makes sense because the banking stocks have taken down the markets. XLF looks okay, still got small resistance here around 32, but it's the KRE, the regional banking stocks. For me, look at this descending line here. We didn't close above it. Yes, it was an up day, for once, but look at this. What if it reverses straight away when markets open? Then all of these will probably, I mean, the Nasdaq has sort of bucked the trend a little bit, so we could have one or two markets just open up a little higher and test a little higher. But the point is, if the banking, especially the KRE, starts to reverse, I'm sorry, but then the markets have to follow. So this is the one chart that could ruin the day for the bulls. Plus, we have the GDP, but otherwise, the markets were strong and could move a little higher, I think. VIX ridiculous. It's as if the whole banking crisis, financial crisis never happened. I mean, do you really think, what is this, 2-3 weeks worth of candles? This makes no sense. I thought when we went in the low 20s, it didn't make sense. Here we're in the low 19s. What are we going to do? Go to low 18s? This is just ridiculous, which is why I've stopped looking at the VIX. Obviously, I paid attention during this period, but gold and silver are the new VIX, especially gold. All right, let's move to rates. I'm going to be very quick with rates because they're not playing the role they used to. It's just, they go up. It's like, well, it is a representation of bonds going down. Bonds are going down because there's less fear and therefore people buying stocks. So basically, rates go up, stocks go up. That was the opposite of what we had over here, this whole period, you could say. But we're getting to a point here where we're hitting a bit of a high point in rates, at least on the 1 year. So at least financial crisis period. So maybe we go back down again. I'm not sure. I'm not paying too much attention to rates these days, though, I have to admit. It's just, when I see them down heavy, it means that there's fear in the markets, and I'm probably time to look at gold in the markets. So I'm not paying that much attention. 2 year, topping out a little bit, could go a little higher and then come back down again. 5 years, same thing, maybe a little higher, but basically at the upper range of this financial crisis trading range. 10 year, same sort of thing. maybe a little higher. We do have good support though down here. Again, the 10 and the 30 especially. Actually, I forgot to not to mention, but I forgot to draw in this ascending line. I noticed it earlier and I forgot to put it in. I think it counts more than the horizontal. Obviously, this would go a little higher, but I don't see it. I see a little sideways action and then actually back down as the markets go back down. So yeah, that's what I think will happen with rates. But again, not paying too much attention to them. I think they've lost their prior thesis, and well, they're certainly not irrelevant. But yeah, I pay attention to them. Let's say when rates go down, because there's fear. Okay, let's look at the dollar. Dollar. Okay, it came up down again now, a bit of sideways. There's one thing. Okay, let's see what happens. Right, for me, we got the horizontal resistance up here, 103.5, horizontal support down here, 102. Just basically watch what happens, and if there's a breakout or a breakdown, then there you go. Time to look at the new low. If there's a breakdown of 100, be very important. If there's a breakdown, it's also probably the more likely scenario, but definitely possible. Imagine we have a break, because I've been covering the breakdown, and we know what happens. Commodities go up, and yeah, if there's a breakout to the upside here, this descending, but especially this horizontal line, 103.5, we're probably going to start testing this 105.5 zone again. Put it down here. And that is something I didn't consider. And if we do that, then what happens to gold and silver and, et cetera, et cetera. But just watch out that this starts to move up again. It starts to look pretty bullish very quickly. So, and it's decision time quite soon. So DXY, keep an eye on that every day. All right, let's move on to commodities. I'm trying to do today's video a bit quicker, actually. Look at this copper just coiling here. We've never really spent this long just underneath this descending line. Every time we touched it, back down again pretty quickly, pretty heavy. Here we never really touched it. Obviously, we hadn't formed it yet. But here, look at this, just coiled, ready to just close above it and break all the way to 4.3. So for me, this looks very bullish. So yeah, copper still very bullish feel, especially after this big run up here, just coiling, sideways and not even breaking down much. So very, very, not very, very bullish. Natural gas, same sort of thing, just touching the bottom, just here coiled. For me, this favors a close above the descending and a very quick move back up. So I love it. Remember, this is not some Chinese pump and dump stock. This is natural gas, the commodity, and we were around $10 just months ago. So absolutely no problem if it breaks down. I bought twice. I'm willing to buy 4 times in total. So we will discuss the next buy zone if we even get below 2. But for now, and also yesterday, if I just look at the 15-minute chart, look at this, bounce very nicely here off this double bottom 2.210, let's say, bounce quickly all the way back up, hit our head again on the descending. So for me, do we flush 210 or do we pop out and close above this? And if we do, it could be a nice bounce involved. So very happy. Natural gas, bit like copper, just coiled. Oil actually topped out a little bit yesterday. So we've had this nice bounce from 65. Some continuation. Look at this reversal looking candle here. Now, I don't expect the biggest reversal, but I do expect a bit of a move down now, at least to 70, and then let's see what happens. Do we continue? There's a lot of news that always impacts oil, so you can never be too precise, but so far the bounce played its role. 65, we know why 65, because this ascending line totally made sense. Then we retested prior support. Did it act as resistance? Yes. I thought we might be able to get the 70, mid-70s, maybe a little higher, 76, 77. Looks like we've topped out already. But anyway, I just expect a bit of a move down, maybe 70, Not going to try and guess absolutely every daily move. Uranium, this, however, did bounce nice. It kind of had to, but now we're getting to resistance, 20. Not just the number, but also the descending line. And this is an imminent breakout or breakdown. So if there's a breakout, then we can go a little higher, 21, 22, whatever. Then we have this descending line to start to test. That could definitely happen. But and then we'll probably go back down again, to be honest. It's just in this very tight pennant. You can see if we start to reverse and go back down again, then it's got a few more days to decide. You know, imagine there's a candle going back down here, then there's another day back down, and then it's another 2 or 3 days, and then it's just forced to either break out or break down. If we have another day, if today actually or tomorrow it goes up, then we're probably going to be breaking out of this, and then it's, you know, we're playing this zone here. So but uranium very tight and has survived so far. So let's see. But the charts really are perfect, I reckon. So okay, gold and silver. Gold higher low still, but definitely lower highs. In fact, we haven't ventured up here in the 2000s in several days. Is it over gold? Not yet, but it looks more and more likely. For me, a close below 1950, even a move below 1950, means we lose this ascending, and then it will start to look pretty heavy, toppy, and then we're probably going to have to test 1930, and if we test 1930, we're probably going to break 1930, and if we break and close below 1930, for me, we go to 1880. So I'm seeing the potential for a move back down again. If the markets go up, definitely there's your excuse to sell gold. We've seen this before, you know, where everyone buys gold as a fear trade. Remember the invasion? And then, well, it's not as if things got great after the invasion. You know, the invasion sustained and escalated, and then we had financial crisis, but well, we had a bear market and gold went down. So it's very, very often that after a massive run up, gold goes down again. And we're starting to see the beginning of that potential. So for me, I actually trimmed a little bit my minus again. I wanted to wait for another move up. I'll get to that later. 2, 3, 4% move up I thought was possible, but seeing gold, I thought, I think I know what's coming. So I trimmed what I wanted to trim, and now I'm done with selling the minus. I welcome a move back down again in the GDX. Okay, I'll get to that later. But the point is, it just looks a little heavy. Now we haven't lost the ascending support yet. You know, we have GDP numbers coming out. We have the banking stocks that haven't broken out their descending line. So we still have a few factors that can sustain this move up for the same reasons. Markets go down, dollar could go down, you know, etc., etc. But it's just when I look at gold, just gold, and ignore all the noise of all the other elements, I think we could start to flush and then it starts to look bad, and then everyone sells, and obviously everyone sells a bit later and they say, oh, it looks heavy afterwards. It looks obviously heavy, so I want to try and predict it a little in advance. So gold doesn't look great anymore, but again, this ascending line still holds. You know, if I look at the 15-minute, it makes more sense. Look, you know, and any moment we could just have a move up and then it starts to look good. Because if we have a small move up, 1970, 1980, we're straight at 2000 again. Although 2000, I don't think we'll get there. I think resistance is just below 2000 now. Silver, however, this is something else that helps gold. Look at silver's yesterday candle. It's just higher highs, higher lows. It looks good. Silver is outperforming and catching up with gold still. And I think that's great. But if gold crashes or goes to 1950, 1930 silver, I'm sorry, you kind of have to get dragged down. But it'll be interesting to see how silver reacts with when gold flushes. Does gold move down 1% and silver moves down like 0.8%? You know, does silver go down less than gold as they go down? Does it outperform? Because normally it should, you know, gold goes down 1%, silver should be down 2 or something. So I'm also keen on seeing how that reacts, but still outperforming gold. And you know, if gold does bounce, honestly, if gold can hold its own and gold sort of moves back up in 1970, 1980, by then silver I expect it to be clearly on its way to 24. So gold's not done, although for me it looks very heavy, ready to retrace. Silver is still looking stronger than gold, put it that way. The miners, you know, yeah, for me, I took a little bit of profit. What did I take profit in? I took profit in First Majestic, Pan America, Mainly some silver stocks actually because they did so well recently, especially CDE Cartagena, which I did not sell. That's I mean that closed. That was like making new highs as gold was going down yesterday. I thought this is on its own individual mission to make up lost ground because it's got a lot of ground to cover on the upside. That's just an individual stock, but I trimmed really mainly silver stocks. I don't want to go through them because I want to make this video very short today. But anyway, the point is the miners, down not even 1%. When you consider they're going opposite to the general markets, and the markets are up 1.5, 2% yesterday. This is not the biggest drop. So they're still not weak. It's not like we've got some reversal candle all the way down here ready to test this zone. But you want to sell when things look good still, not when they start to look weak or when they are weak. So I did trim and I thought, look, this move that I was expecting, not expecting, but hoping for actually, of 2% higher, why don't I just sell here in case it doesn't make it? 2% is not much. So I have done my selling for this zone here. I forgot what I sold. I forgot whether I sold here or a little higher. I think I sold around here. Maybe let's say a little lower. And then I sold around here, basically where we are here. It wasn't high of day, it was kind of where we are. Well, it was individual stocks. Some of them were a little higher than where we closed, let's say. But so let's say an average of this area I sold. And if you look at my trend lines, the average, if I was to sell both lines, it would be sort of here. And the difference between those two, if you know what I mean, is what? Yeah, let's say 1.75%. So on average, I could have made 1.75% if we go all the way up here and I sold. Who cares? It's the same thing. So point is, I've sold my miners for this zone, and if we go all the way up to the top of the zone, I'm not selling because I've already sold. But if we break out higher, I'll be selling the next zone. GDXJ, same chart really. Yeah, see, it's annoying if it goes up here because I've already sold, but it is what it is. That's if it goes all the way back down again, I'll be very happy that I sold twice rather than just this one time for this zone here. So let's see what happens. It's all on gold, which is dependent on the market, which is dependent on the bank stocks, and also the dollar will play a role too. But I just thought maybe we look a little heavy, so let's sell. Anyway, let's see what happens. GDP numbers, the dollar, the banking stocks. That's what I'm really focusing on, and obviously gold and silver. Yeah, good luck today.